What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Happy Monday. Hope you're having a good start to your week. We are going to be going over today's Bitcoin fundamentals report. That is a good way to stay up on everything in Bitcoin, all sectors, including headlines, price, mining, lightning, all of that. So we're going to cover the best stuff from all of those sectors. Let me share my screen and jump right into it. Bitcoinandmarkets.com, Bitcoin Fundamentals Report 259. It's a little bit shorter issue, but I think I packed quite a bit in there. Some interesting topics. Rolling down the website here, also published October's price forecast competition. That is for supporting members on the website. You just guess the price at the end of the coming month, the candle close for October. And the closest person wins $20 in sats over the Lightning Network. Just gave out last month's reward to Dave S. So congratulations, Dave, for being the winner last month. What else comes out on this? Protons. I put out a couple other protons in the last week. Let's see, proton number 3 and 4. Those are for the premium tier guys. I also have all of my podcasts that come out here. So if you just sign up for the free tier over on the website, you're going to get the podcast notifications and also the weekly fundamentals report. Before we get into it, also check out bmpro.substack.com. I'm writing for them now once a week as well. Bitcoin Magazine has done a lot for Bitcoin over the last few years. There is some controversy around them. No company is perfect, but they have helped me out. Give me a platform for my content. So support them if you can over at bmpro.substack.com. And this is not signed in, so I can't do a live chart analysis, but we will be going through a price analysis here on the fundamentals report. So this is issue 259. Always start out with a meme. And this one is from Ropium on Twitter, a ghoulish guy selling you shit coins with the promises of yield and liquidity and Web3 and crypto, and then they're stealing money, rugging you out of your back pocket. This was a very good meme. And look, this guy looks happy. He looks happy to be sold all these shit coins and be stolen from. So that was a very good meme this week. All right. Snapshot of Bitcoin. Weekly trend is a slow build to a spike. This over the last 12 hours, 24 hours, we've had a spike up. We will take a look at the chart on that. This is a good development for price, but we need to see some follow through here. We are coming up onto some important levels. So the price has to show us what it's got, right? If it just falls apart at the first sign of resistance, we can't say that this is the true bullish breakout quite yet. But, it's little by little and then all at once. So chewing up the chart until we break out to a new higher level. All right, media sentiment is positive. I still remain surprised at how positive the media is on Bitcoin, and especially Bitcoin mining. It has just really about what would you guys say, like 6 months to a year ago, pretty much when BlackRock applied for the ETF, just a 180 on the environmental impact of Bitcoin, how Bitcoin is super good for the environment, mitigates emissions and all of that stuff. We still just come out with headline after headline of Bitcoin being positive. Network traffic is moderate, and we will go over some mining information on the mempool and the charts and stuff. Mining industry is, I say, consolidating because I'm looking at like public miners. Their stock prices are down. There is some stuff going on with bankruptcies, like with Core Scientific I've talked about recently. So there is some consolidation in the industry happening. Okay, and then days until halving, we are now under 200 days at 197. Pretty soon we'll be under 180, which is 6 months. So that is coming, TikTok next block, it's coming. Price section is weekly price, 28,056 at the time of writing. That was a 6.5% increase over the last issue. Market cap getting close to 550, but 547 billion, or over $500 billion. Satoshis per dollar, 35 $2.65. One Finny is $2.80. Mining sector previous adjustment was 5.5%, and it is estimated, I think it's about 12 hours now, to be roughly even, very slightly negative at negative 0.3%. Mempool was sitting at 31 megabytes at time of writing. Fees for the next block. Oh man, this is a typo. It should be $114, not $1,014. I don't think even in the far future, our transaction fee is going to be $1,000, maybe, when the average value is $1 million per transaction. But anyway, that's supposed to be $1.14 or 29 sats per virtual byte. And I changed this from medium fee to low priority fee according to mempool.space. And that was at $1.06. Lightning capacity. Now, this is the big wow factor, I guess, in the snapshot. And Bitcoin capacity on Lightning Network dropped by 228 coins, or almost 5% in 1 week. When I saw this, I was like, what the hell? Did some big liquidity provider go offline? That could be the case. We'll have to keep following this. I mean, I've been following this for over a year now, I think, or maybe about a year. And this is the biggest single drop that I've seen, and it's just kind of out of the blue. Same thing happened with channels. Almost 4,000 channels dropped this week, and that was almost 6%. So something happened this week on Lightning with some big liquidity provider. Probably, I don't know, so maybe somebody was running a bunch of nodes and channels, as just a personal thing. I remember back when Lightning was getting started, I talked about perhaps starting to run some nodes and getting that risk-free rate of all the fees. Never went through with that, but that it might be somebody did something like that. So this was just an individual that had 5% of the liquidity. That would be a lot. That'd be 228 Bitcoins, but it could be a marginal player. We probably would have heard about it if it was a big name player, but this is a big move, minus 6% and minus 5% for the channels and capacity respectively. All right, let's get on with the report. So in case you missed it, I always talk about what content I had coming out this last week. So for members, the October price forecast, I talked about that. It's a fun way to just have, it's included in your support of my show, and you can enter, and it's just a fun, friendly forecasting competition. Closest person gets $20 in the Lightning Network. So check that out, guys. Also, the Proton 4 came out, had a couple podcast versions of these live streams come out. This one was fun. Shadow banking secrets, collateral multiplier. I don't want to go into it here, but check that podcast episode out. Even if you watch the live stream, I cut out a lot of my my speaking errors that I do when I repeat myself, or ums and ands, and losing my train of thought, or knows. I say that a lot, unfortunately. So check that out. Cut it up. I edited it down to make it very concise for you guys to get the most out of that collateral multiplier episode I did last week. Okay. Blog post. I have my blog post and the Bitcoin Magazine Pro. I'm going to start linking those there as well. Paradox in economic headwinds, recession, or inflation. That was what my piece was titled last week. Okay, let's get into the Bitcoin headlines. Bitcoin spot ETF delays and update. We had a very non-standard week in regards to the ETFs. Very interesting developments occurred due to the threatened government shutdown in the U.S. The SEC was concerned their skeleton crew of essential personnel would not be able to address the ETF filings on their docket in October. So everything was coming up. I think it was like October 15th or 16th. And so instead of possibly not having the people there to handle all of these things, they started delaying stuff early. They also approved the Ethereum futures ETF, which is very interesting considering the court case that they keep talking about here, where a district court said the rationale behind delaying a spot ETF, but approving a futures ETF didn't pass mustard. Yet now they're going forward with these futures, Ethereum futures ETFs. So it doesn't look like they're going to be reversing themselves on Bitcoin futures. That was also one of the theories, that to come within a logical framework, according to what the district court wanted them to do, they could either approve the Bitcoin spot ETFs, or they could disprove all the futures ETFs. But now that they're approving the ETH futures, that pretty much tells us with 100% certainty that they will not be unapproving the Bitcoin futures ETFs. So the next up is probably a Bitcoin spot ETF. But there was some other stuff coming up here too. So they broke with some of their tradition. They didn't just delay last minute this time. They delayed early due to the shutdown, and also gave applicants some comments to address regarding the filings. And so this is Eric Balkunas, a tweet from him. He said, yes, while the SEC delayed spot Bitcoin filings last week, they also sent the issuers comments to address regarding their S1 filings related to plumbing and legal. This is a break from the typical pattern of delay, radio silence, then denial. A welcome sign, in my opinion, although timeline is unclear. And I say, okay, it's not clear. I don't know if the early delay moved up the clock on the subsequent timeline. And I've talked about this many times in the last, I would say, 2 delays that we've seen, is if they delay a couple days early and they have 45-day clock right after that delay, does that delay then get moved up? Or is it just like a delay that will go until that deadline happens and then they'll be extended? I don't know. I don't even know if Eric knows, because he kind of alluded to not knowing because it's unclear. But we will see when that timeline happens. Best case scenario here is it's pushed up by 2 weeks, which I think that took us a delay in October, like October 15th. A delay then would have pushed us out to January 15th. So since they delayed them early, that would push us into December if it resets the timeline. So that's kind of important for year-end sort of thinking that, are people going to flood in on December 29th? I don't know. They probably will wait until the beginning of the year. So there are some questions that are interesting around this delay, this non-standard delay that they did here. All right. I say price action this morning might be in response to the ETH futures ETFs launching, or a change to market expectations around the Bitcoin spot ETFs. All right, next headline. Chair Gensler is under fire in Congress. The House Financial Services Committee questioned Chair Gensler this week. I personally thought it was a nothing burger. Many congressmen were very upset on Gensler's treatment of scams. But as I pointed out in a tweet, they can't even form a coherent question. Yet the crypto bros go crazy as if it is a gotcha. So I don't know if you guys saw that tweet that I had about some congressman was asking about, what if I bought a digitized Pokemon card on an exchange, digital exchange, that's the term he used, via a blockchain? And Chair Gensler just said, I'd need more information, because that's a nonsensical question in several ways. I went through a big rant on Twitter about how that's just a nonsensical question. So, but they think it's a gotcha, and all the crypto bros are out there saying, see, Gensler is just an evil man. He's just an evil guy. But he did once again confirm that Bitcoin is a commodity, or he treats it as a commodity, and that's the only one that he treats that way. What else did he say about that? Oh, there was a letter that preceded the committee hearing that urged Gensler to approve the Bitcoin spot ETF immediately. And then I saw some more news later after the time that I published this. McHenry said that he was going to subpoena Gensler to get his cooperation because he wasn't providing the information that the oversight committee was requesting. So lots happening here. I mean, this could really, like Eric Bokuna said, he thinks maybe we could go to bed one night and wake up and the next day they're all approved. Like there's no build up to this. They just say, to hell with it, just approve them all now. Right? That's possible. Just like with the Ethereum futures ETFs that just happened last week. Right before the shutdown, they're like, to hell with it, just approve them. So that is a real possibility. I don't know what the odds on that would be, but the way it's looking is, I don't know if it'll get approved this year even, because depending on that timeline I was just talking about. So it's a possibility that we get approved this year. It's probably an increasing possibility now that it gets approved sooner rather than later, where it was the other way around just a couple weeks ago. So we'll have to see how this develops. And I linked to the video here of his testimony. Okay, for macro headlines, I post about macro in the Telegram all the time, and I respond to some tweets over there on Twitter. But the big thing for me and the last week was it was dominated by my call for a climax in the recent trends in macro. So the dollar wrecking ball, the U.S. 10-year yield, and oil. Those are the big ones that I've been watching. And I think that they're going to reverse sometime soon. And it would make sense around the end of Q3. That's when there's like ultimate, pressure in the macro markets. So now that we're into Q4, perhaps these things will turn around. But I think there is going to be a climax very soon in these markets. That would mean a blow off top for the U.S. 10-year Treasury. Not a blow off top, but a reversal at least in the medium term for the dollar, and oil, a reversal in oil as well. So I've been pushing against this kind of doomsday scenario for a long time, where inflation continues to run hot, U.S. Treasury yield goes up, the government just prints, Fed prints, because we know that's not how money works. But I've been pushing against this for a long time, and I tried to explain last week why I see a reversal point coming. There are two release valves in this system for this type of move when there's a really acute pressure on the system. So dollar going up, U.S. Treasury yields going up is an acute pressure on the system, and oil going up. All of these things apply a very acute pressure. So there are two release valves for this. Either print more money, which would give that needed inflation to sustain economic activity under pressure. Or the other one is a major economic slowdown. So most people think that the former, they're going to print money and they're going to boost everything up, and then they're going to institute yield curve control, which doesn't really work. Sorry about that, guys. I had a kid's friend come over, ring the doorbell, and the dogs went wild. Okay, where were we on this? So yield curve control. Most people think they're going to do money printing and yield curve control. I talked about Luke Groman's topic on this, and he is just a voice for the traditional understanding of what's going to happen. That the omnipotent command and control solution is going to work. They don't understand how the system works. We here at Bitcoin and Markets, you guys are longtime listeners and, consumers of the truth here in macro, know that the private sector is who prints money, and central planners will always get beat by the market or will be beaten by the market. We know the banks are printing. Oh man, I should have said aren't. Damn it. We know the banks aren't printing. Therefore, the only release valve is economic slowdown. What does economic slowdown entail? Lower oil prices, lower interest rates, and I should have said lower inflation, lower all of this stuff. So let's take a look at some of these charts. Gold gets smoked. Look at this gold chart. It's just going crazy. And I responded to a tweet today from Nick Bhatia, and he was talking about the dollar wrecking ball. And I said, specifically about the euro. And I said, oh, it's not just the euro. Look, gold is getting smoked. JPY is hitting 150. The Chinese yuan looks to be circuit breaker activated at 730. Like something is going on here. This is a big move, and it's not just the euro. And I also heard a rumor as well that this was from Daniel DiMartino Booth, that the Chinese were selling gold selling gold for dollars instead of buying dollars with yuan. Because if they bought dollars with yuan, that would lower the exchange value of yuan, especially if it's in the billions, right? Now, if they sell gold to get dollars, then that wouldn't affect the value of the yuan. It actually would bolster the value, at least would not a floor, but it would put some support under the value of the yuan. So I think that's possible. Anyway, he asked me, what's the source of my rumors? I told him I also looked up another story, and that is legit, that the local banks they were having trouble using gold for liquidity reasons. They had to get dollars for liquidity reasons. So what they did was they went in, they took off a bunch of the quotas of the banks for using gold. And so now the local banks can sell their gold or use gold to get the needed liquidity to get dollars. So very interesting what's happening here in the gold market. But this could be one more. I mean, also look at this chart compared to Bitcoin. It's the other way around. So it's kind of a swap here happening. Gold is losing this monetary premium while Bitcoin's gaining it. I think that's very interesting. But let's go on to the next chart. Euro is getting smoked as well, hitting some of these lows from back early 2023 low. It looks like probably January 2023 had a low right around this period. But also back in September of 2022 was when we went way below parity on the euro. And so this might be just a really seasonally weak time of the year for the euro. And we see that happening right now as well. Next chart, US 10-year is crushing everything. And I strapped a fib on here, and you can see that if we go from the weekly candle bodies, we're approaching the fib extension at 1618. So we will see if this turns around. If this is a peak, that would be very interesting if it tapped that peak and then turned lower. But this can't continue. Just like all blow off tops, can't continue. When you see a parabolic move in something, there needs to be a correction. And that correction, I think, is coming extremely soon for these things. And oil is actually showing some weakness here. So it tapped 95. It's all the way down to 89. And then right now it looks like $88. So it came down even a little bit more. So we will see how oil ends up. It looks like there's going to be some major support around 84. I did also look on the TD sequential, and there's support around 87. So maybe it bounces there, maybe it breaks through that, but we should be expecting, if all of these things are causing a massive economic slowdown globally, we should expect oil to come down, rates to come down, the dollar will be the one that remains the strongest for the longest, but it will also turn over. And of course, inflation will come down. Okay, so that is it for macro news and Bitcoin news. Let's get into price analysis. So I saw this fantastic chart on Twitter from Charts BTC, and what he did here was he just put these are all doubles on the y-axis, I guess this is. And so 1, 2, 4, 8, 16. And right now we are between the 16,384 and the 32,768. And this is also the period that has had the most amount of days in this, in this region or level. I think he called it level. We've had 586 days at this level of doubling. What I thought was interesting too was there were some patterns here. So it seems like, obviously, when we have the blow off top and then we have the consolidation period, that is where we get a lot of support in. This wouldn't be volume by price. This would be time, I guess, by price, time by price. This has the most support in these regions. And then the intervening period has very little time by price support. So maybe we, from 65,000 to 131,000, we only spend 90 days there or something. That would be following within this pattern. And we just continue to scream higher. Anyway, I thought this was a very fantastic chart. Let's see what else I wrote about this. This brings to mind the idea that it takes time for new levels of price to sink in psychologically. The price rapidly expands and feels like an obvious bubble because it is 10x where it was before. When price first went to 1,000, it didn't seem real and maybe wasn't a fair price at the time, right? Only after 1,000 days did 1,000 seem fair. And actually, if you look at this, right around 1,000, this is this 512 and 476 days, right in this kind of between 500 or so and 1,000. So it took a long time for this to feel like a fair price, around $1,000. Took about 1,000 days. And then the price could sustainably go higher. That makes sense too, in the respect that holders will have a bubble target in mind to take some gains. So you might say, okay, I'm going to sell 10% or something at 100K. So you have these kind of bubble targets in your mind to capture some gains of holding Bitcoin. Even longtime hodlers, and not every Bitcoiner is like that. Like, I've never sold 10% of my Bitcoins, but even longtime hodlers have a price that they're willing to part with Bitcoin, even though they likely think it will go to 1 million plus. Now, this goes along with like a deflationary mindset, or why people, medium of exchange. Well, people aren't using Bitcoin as a medium of exchange right now, or that's not the main dominant function of Bitcoin, because people are not willing to offer enough value in exchange for the Bitcoin. Because say I value Bitcoin at $1 million a piece. Well, if you're willing to give me that value of $1 million, then I'm willing to use my Bitcoin, right? But everybody has slightly different subjective value in their head. And maybe psychologically or subjectively, they think that 100,000 is fair for the first tenth of a Bitcoin or something, whatever it is. And so there is, as price goes up, there is some marginal Bitcoin that's unlocked, right? So anyway, that's just what I was getting at. In other words, you could look at the 4-year cycles are giant accumulation and distribution cycles. The distribution happens around psychological bubbles, and the accumulation happens around psychologically fair prices. So back to this chart from Charts BTC. These are psychologically fair prices. And once it has sunk in that each one of these levels is psychologically fair value, then you can start the next rally. And it might not all be driven around halvings. It might just be that about 2 years or so, 3 years maybe, is when if there's enough time that has gone by for people to become used to a certain price level. You know what I'm saying? So anyway, I think this is a very, very interesting chart. So go follow Charts BTC. I followed him for a long time. I think he's followed me for a long time. He's a good chart maker over there on Twitter. What else do I say? Oh, that's what I said already. Okay, now onto the Bitcoin charts. Bitcoin is currently battling with the 200-day and the 200-week moving averages. So the 200-day is at 28,040, or at least it was at the time of writing. And the 200-week is at 28,073. Very, very close. 28,000 basically. And I wish I could sign into the live price, but I will not be able to check the live price while I'm doing this right now. But those are very, very important levels. The 200-day, very important levels, or very important level from just a traditional market sense. 200-day moving average has always been important for a very long time. And the 200-week, Bitcoin never dropped below it until this cycle. This is a very, very significant level for Bitcoin. So we shouldn't be surprised that the exact level where these two were the same, that it would attract the price. Since charting is a series of Schelling points, and this is a big one, breaking both these important MAs at the same time would be massively bullish, in my opinion. All right, so this is the daily. You can see we're pushing up on the 200-day moving average, or strong resistance above, strong support below. I think this strong support might have moved up. It moved up to 26,000, I said, on this dip, and maybe that has even moved up to 27,000. We'll have to see where the price action settles out, but there is increasing pressure for a rally here in Bitcoin. Next one is the weekly, and you can see the 200-week moving average right there as well. This will be the first ever bullish, I guess, golden cross on the weekly, because we've never had a death cross on the weekly before. But this is very, very strong. You know, if the price goes up here, Bitcoin goes up past this resistance, this strong resistance, that's going to pull the 50-day up very quickly, and it's going to cross bullish above the 200-day. We're going to have to watch for that, though, because that also could be a Schelling point where people are looking at it. So we could break this strong resistance, come back and back test several weeks later, which would be when we get the golden cross on the weekly. So anyway, I'll make sure to keep you guys updated on that. Make sure you sign up for the premium content on the website, because at least twice a week now I'm putting out Bitcoin charts, macro charts, all that stuff, what I see going on out there in the environment, macro environment. All that being said, there is, of course, a chance price gets rejected here. I think that's less likely, but there is a chance. And if that happens, it will be temporary. No technicals or fundamentals are calling for a price crash. It would take a singularity event like the COVID crash for that to happen. However, for price to stay on schedule, my broader macro thesis to play out, Bitcoin will need to get going on its rally soon. All right, that's it for price. Moving on to mining headlines. So Bitcoin miner Marathon mines invalid block in failed experiment. Marathon mined an invalid block this week. They mine with a few machines on an experimental software and got lucky. In the block, some transactions were included in the wrong order because they were included in ascending value order instead of time order. So this was just an experimental thing. I guess obviously miners are trying to just experiment all the time. They can squeeze out 1%, 2%, 3% of something and they get an advantage, right? So it makes sense that you would experiment. They just got lucky with these couple machines that were able to mine this block unsuccessfully, though. It is invalid. For example, one transaction spent the output of another transaction, but was ordered after it. One transaction spent the output of another transaction, but was ordered before it. Damn, I have some typos here, guys. One man show. Therefore, it was an invalid block. So this is what Marathon Digital Holdings said. We can confirm that Marathon did mine an invalid block. We utilized a small portion of our hash rate to experiment with our development pool and research potential methods to optimize our operations. The error was the result of an unanticipated bug that came from one of our experiments. In no way was this experiment an attempt to alter Bitcoin Core in any way. Our team noticed the invalid block around the same time as the rest of the world, and we immediately corrected the error. This incident while unintended, underscores the robust security of the Bitcoin network, which rejected and rectified the anomaly. And that's exactly what I said. Great example of how nodes are in charge and a segment of the so-called security budget of Bitcoin. The invalid block was rejected, and that was it. All right, difficulty. Bitcoin's difficulty did adjust 2 weeks ago, up by 5.5%. I'm publishing this right before the next adjustment in about 16 hours from the time of writing, and it was estimated to adjust downward by 0.3%. Mining has behaved as if we were near all-time high prices for the last couple months, so this is very, very bullish. Hash rate as well. Let me pull this one up. This is from lookintobitcoin.com, I believe, and you can see the hash rate has stayed high up here, so very, very healthy over the last couple weeks for hash rate. And mining. Mempool. The speed of the mempool collapse has been epic this week, from 225 megabytes down to 25 megabytes. And look at that. This is a 3-month chart, and it just got chewed through. Wow. Wow. All the way down there to 25 megabytes. Pretty crazy. Okay, ordinals and inscriptions. So some interesting things have been going on here in regards to ordinals and inscriptions. These are kind of like NFTs on Bitcoin, I guess. They take a Satoshi and you can color them, like color coins, or mark them, number them, however they do it. I'm no ordinals expert here, but this was a kind of a thing, not really a thing, but kind of a thing. And they were clogging up the mempool quite a bit. So a lot of the decline in the mempool seems to have to do with inscriptions. So let's take a look there. It appears the number of inscriptions has dropped from an average of around 300,000 per day to 50,000 per day. And let me pull this chart up. This is from Dune.com, and I do link this in the source for the image on the report, so you guys can go and check out all the different charts. This is just 2 of like maybe 10 charts that they have for ordinals. So go support Dune over there. What they also have other things from other networks like staked Ethereum and Lido and all of those. What is the state of the decline in Ethereum? So check that out. But okay, what are we seeing here? The top one is the total inscriptions in the dark blue line, and you can see it has tailed off here at the very top, and the daily inscriptions in the bars. And look at that. Over the last few days, last week or so, it has really been flat. Now, this chart down here at the bottom is color-coded by use case. So different ordinals, I guess, can tag different things. You can tag some sort of image, or you can include, I guess, a hash of an image into the Bitcoin blockchain. Even a video into the Bitcoin, a hash of that, I guess, into the Bitcoin blockchain. Audio, application uses, but the main use case, looks like they experimented with images first, trying to do those NFT monkey JPEGs or whatever, and then they started doing some application stuff that would be interesting. But no, really, the only thing they could ever find that was valuable was text. Scams. Anyway, there's no real other use other than the text NFTs at this, or text ordinals at this time. And I say here, I'm not an expert in ordinal theory, but from what I gather, there was a bug in the numbering system resulting in some ordinals being quote unquote hidden. Ordinal creator Rod Armor, or was it Rodamore, called these cursed ordinals earlier this year. That bug has now been fixed, and the fix is causing problems with the auto-inscribers people set up to spam Bitcoin, it seems. And this is just speculation. As of now, as far as I know, ordinals are very, very niche. The main use case is to be a nuisance to Bitcoin and perhaps clog up the mempool. So interesting development with ordinals and inscriptions. Okay, Lightning and Layer 2 segment here. Rodamore. I don't know if he pronounces it Rodamore or Rod Armor. I think Rod Armor is kind of a joke, but Rodamore returns, announces Runes protocol to compete with BRC20. And this bullet point is linked to the article. It's a Bitcoin Magazine article, so you guys can check that out. Quoting from that, we have this. Tuesday of this week, Casey's warm-up was over. He unveiled a blog post introducing the idea of runes, an alternative fungible token protocol on Bitcoin. So this is interesting. It's fungible. It's not for NFTs, which are non-fungible tokens. This is an alternative for fungible tokens, which is like Bitcoin or Ethereum or whatever sort of things that are meant to be like money, right? Or Bitcoin is money, but you know what I'm saying here. In other words, runes serves to mitigate UTXO proliferation and provide significant user experience benefits compared to other fungible token protocols on Bitcoin. So BRC20, that I remember, I mean, I'm not a dev. I don't know all of this technical stuff inside and out, but BRC20 was an inefficient use of block space and almost maliciously so. So they were doing a lot of these different type of, I guess, fungible tokens using BRC20, kind of like the ERC20 on Ethereum. And it was maliciously bloating the Bitcoin network. So Casey Rodamore comes out and he has runes that is to mitigate UTXO proliferation. And this is what he said, quote, runes are harm reduction. BRC20s create a lot of unused UTXOs. In order to spend runes, you have to destroy UTXOs, which is good for the system as a whole. It's also beneficial for users, enabling simpler PSBT-based swaps. Since a UTXO can only be spent once, you can create a set of transactions, and then out of those transactions, you can guarantee only one of those can be mined. BRC20 transactions can't do this, according to Casey on Twitter Spaces. This is my input here. So runes are completely separate from the ordinals protocol, which uses the witness part of the transaction for data. So ordinals uses the witness, but runes uses the much older op return made famous by the Counterparty project years ago. And the only shitcoin that I ever dabbled in, guys, was the Counterparty token years ago. I didn't burn any Bitcoin to get Counterparty, but I did buy some Counterparty because I was interested by this kind of op return layer 2. I'm still kind of interested in this, but it's interesting, but meh, I'm not too interested in it anymore. I do not have a strong feeling about runes or ordinals either way, but I tend to think they are used by primarily malicious people, especially ordinals. Ordinals are used by mainly malicious people. I don't think there is a large market for these things on Bitcoin's consensus base layer. Eventually, fees will price much of the hobbyist use cases out. So that's where I'm going to leave it today, guys. Ansel Lindner, Bitcoin and Markets. Thanks for joining me. Hope you get off to a good start this week. Happy Monday, and I'll see you on the next live stream. Peace.